Good morning, traders, and welcome back to BCI's morning market analysis. First up, let's have a look at the US dollar. The US dollar started the week on a softer note, hovering near a 10-week low around 97.5 as investors look ahead to the Federal Reserve's policy decision. Markets are heavily leaning towards a 25 basis point cut on Wednesday, with only a slim chance of a larger move. Recent US data has reinforced the case, showing a weaker labor market alongside inflation. Globally, other central banks are also in focus this week. Canada and China are expected to ease, while Japan and the UK are likely to hold steady. Technically, the dollar remains in a descending channel, with resistance capped near 98.24 and 98.32, while support lies at 97.25, 97.11, and the psychological level of 97. Next up, let's have a look at WTI crude oil, which edged up to around $63 per barrel on Monday, supported by concerns over Russian supply after Ukraine targeted one of Russia's largest refineries as peace talks stalled. US political pressure is also in play, with President Trump reiterating calls for Europe to halt Russian oil purchases. Still, demand concerns and the risk of oversupply from OPEC continue to weigh on the outlook. On the technical side, oil is facing resistance at the 20-day moving average around 63.22 and last week's high of 63.78, with momentum indicators suggesting consolidation after the recent rebound. Support remains around the $62 mark and 60.78, with resistance layered at the psychological level of $64. Next up, let's have a look at gold. Gold traded near $4,000 per ounce on Thursday as volatility in global equities and concerns over a potential AI stock bubble boosted safe haven demand. Despite stronger US jobs data, gold continued to climb, signaling firm sentiment among bulls. Precious metals broadly advanced, with silver up 2.2%, platinum up 1.7%, and palladium up 2.4%. Investors are also watching the US Supreme Court hearing on the legality of Trump's tariffs, a new potential source of policy uncertainty. Meanwhile, a steepening US Treasury yield curve has reinforced expectations of a soft landing and potential rate cuts, which in turn supports gold. Technically, gold is hovering below the Bollinger Band midline at 39.84, with the MACD still negative and RSI at 47.2, suggesting that upward momentum is building again. Key support levels sit around 39.36 and 39.29, whilst resistance remains at the 4,000 psychological level. Lastly, let's have a look at the Australian dollar, which traded around 64.80 on Thursday after a stronger than expected trade data. Australia's trade surplus widened to $39.4 billion in September from $11.1 billion in August, driven by a 7.9% rise in exports, mainly gold, and a modest 1.1% increase in imports. The RBA's November decision to keep rates at 3.6% reflected ongoing inflation concerns, with policymakers signaling little room for further cuts. A stronger US dollar and solid US dollar capped gains for the Australian dollar. Technically, it remains range bound near 65 cents, trading below the 9-day SMA at 65.39, showing weak short-term momentum. Support is seen near 64.40 and 64.14, while resistance stands at 65.79 and the psychological level of 66 cents. Well, overall, markets are in consolidation mode, balancing strong US data with expectations for slower global growth and potential central bank easing heading into the year end. That's all for today's morning market analysis. I'm Ahmed. Thanks for tuning in, and we'll see you next week.